Hello and welcome back to this channel. Ultimate Beginner Swing Trading Course Lesson 4. This video will demonstrate how swing trading technique works and prepare beginners to do their trading setup. I will show you how you can improve your trading result so you can make a better profit from the stock market. Finally, I will show you when and where you can enter the trade and how you can set up your stop loss and profit target, that you do not stop out of the trade prematurely, along with some practical examples to clarify the procedure. What is swing trading? Swing trading is a technique that attempts to capture short to medium term gain in stock over a period of few days to several weeks. Traders use technical analysis and different time frames such as H1 and higher to look for trading opportunities. How swing trend look like? This is the price trend Air Canada stock H1 time frame. I installed simple moving average with 42 days period as dynamic support here. Now each time that the price goes up, it makes higher swing high, and when it pull back, it makes higher swing low. So again, when it goes up, it makes higher swing high, and when it pull back, it makes higher swing low. So this behavior of the swing trading, it continues all the way up, and each time the traders, when the price pull back, the traders enter the market, and when it goes high swing high, they exit the market. So basically this is the characteristics of a very strong uptrend. That's a characteristic of a strong uptrend, that the trend makes high swing high and high swing low, high swing high, high swing low. So, and the price is above the market structure or simple moving average with 42 days period. Now market structure could be trend line, could be wedges, triangle, channel, and so on. So this is going to be your potential profit. So you can buy here low and you can sell high. And if you do that, this is going to give you a very good risk to reward ratio. Now, the traders should remember that the point that they have to enter the market on the pullback, it should be very close to the market structure. I am going to show you in the next slide that why we have to trade or enter the trade when this point is very close to the market structure. How to improve your swing trading result? I am going to show you step by step the procedure to swing trading and improve your result in order to make better profit from the stock market. Now the first step is find the direction of the trend. That's the first step that you have to do. The second one is always wait for the price to come close to the market structure, as I explained in previous slide. Number 3, use pattern and formations to properly time your entry. I'm going to show you clearly. Number 4, use proper stop loss to avoid getting stopped out prematurely. And finally, number 5, use proper target. How to find the direction of the trend? This is the price trend Apple stock D1 time frame. I installed simple moving average with 12 days period as a shorter moving average, and also simple moving average with 42 days period as a longer moving average. Now when the price is crossing the longer moving average while going upward, and the price be above these two moving average, this considered as a strong uptrend. And when the shorter moving average crosses the longer moving average while going downward, and the price be below the 2 moving average here, that's a strong downtrend. The same thing as here. The shorter moving average crosses the longer moving average while going downward, and the price be below these 2 moving average, it's considered as a strong downtrend. Now, in this case that we have a strong uptrend, the price is above these 2 moving average, then these 2 moving average considered as dynamic support with almost 7 touches. Now, in these 2 cases, that is, here we have a strong downtrend, and these 2 moving average that is above the price, these 2 moving average that is above the price, it considered as dynamic resistant with almost 5 touches. Now, this cross here, that the shorter moving average crosses the longer moving average while going upward, that's the best place to enter the market, because the price is above this cross section. And also these 2 crosses, that the shorter moving average crosses the longer moving average while going downward, this one and this one, this is the best place to exit the market, since the price is below this cross point. You see, the price is below this cross point. So these are the exit, and this is an entry point for traders. Now, second, always wait for the price to come close to the market structure. This is the price trend Air Canada stock D1 time frame, and I installed SMA 42 that here act as dynamic support. So far, you have learned what is a swing trend and how to find the direction of the trend. The second thing to learn here is where is a good place to enter the trade. You should not enter the trade blindly, because let's say the direction of the trend is upward. You just blindly, somewhere around here, you enter the trade because this uptrend, the direction of the trend is upward. You will not find a logical place to put your stop loss if you, let's say, enter here. The best place to enter the market is close to the market structure. This is the market structure, and this is the closest place to the market structure. And you see there is a price rejection by the dynamic support. If you blend these 2 candles, you are going to have a hammer, which suggests a price reversal from downtrend to uptrend. Now, let's look at this example here. Let's say you enter the trade. Let's say you enter the trade at this point. Now, where is the logical place that you can put your stop loss? The only logical place I can see is this dynamic support, SMA 42. You should put your stop loss below this. You have to put your stop loss below the SMA 42, and this is the only logical place to put your stop loss, which is going to be too wide. And you will have a poor risk to reward ratio, so wait until the price comes close to the market structure. So this way you can enter the trade and you can ride on a big trend like this, and then you will be able to exit the trade at this point. That's the swing high. And because of this shooting star at the top of an uptrend. Number 3, use price action or patterns and formation to properly time your entry. This is the price trend, Apple stock D1 time frame. I installed SMA 42 that here act as dynamic support. So far, you have found the direction of the trend, you identified the price coming near to the market structure, and we have located the price coming close to the area of value or market structure. Now we see price rejection in the form of price reversal pattern and formation like hammer and shooting star, which it means the buyers are stepped in and momentarily control the market. Candlestick pattern and formation can help you to find price rejection. You can also use pullback technique to find your entry. For example, in this graph, you see here that the price is coming to the market structure in the form of hammer. That you know it suggests the price reversal. So you can enter the market when the next candle is formed. As soon as it opened above this candle, you can enter the market and ride on this trend. If you do not remember the pattern, if you do not remember any pattern and formations, you can blend it with candlestick mat blending and you get the equivalent. This way you can find a good and safe place to enter and make profit. Here I used SMA 42 as a dynamic support. You can use SMA 50, you can use SMA 100 at your preference, that what simple moving average you would like to use. Number 4, use proper stop loss to avoid getting stopped out prematurely. And number 5, put proper target to maximize your profit. This is price trend, Apple stock D1 time frame. I installed simple moving average with 40 days period, 42 days period as dynamic support, and also I installed ATR curve with 14 days period to calculate each candle ATR value. Now, as I discussed before, we would like that the price come to the market structure, and that is the nice place to enter the trade. Now, we use price action and also patterns and formations in order to find the entry, and this is the hammer suggesting the price reversal. So that's a good place to enter the market. Now we have to calculate the stop loss. In order to calculate the stop loss, we have to calculate the ATR value. So we put one ATR value below the support. Now, in order to calculate the ATR, we have to put a vertical line all the way here and to hit the curve, the ATR curve, and then we can read the value from the chart. So the value is 39 cents. And now I amplify this hammer in this corner that you see it very clear. This is the same hammer. The top price is 23.55 and the lowest price is 23.27, and the stop loss is calculated as 23.27, the lowest price, minus the ATR value, so it comes to 22.88. That's the stop loss. So you enter the price here and you put your stop loss at 22.88 and ride on a big trend. Now, in order to find the proper target, we normally use the previous price behavior and information. So these are the values of the price, higher high and higher low, that you see. This is higher high, higher low, higher high, higher low, and higher high. So we use this information in order to see where the price may go next in future. So the price collapse here at 24.45 and reverse. So we know that if we use this level as a resistance level, the price may come around here and the selling pressure will step in. So the best target that we can use is, let's say, minimum we can put 24.45 minus maybe 10 cents in order to be on the safe side. So it's 24.35, and we already have the stop loss at 22.88, and we can ride on this big trend. And even if the price is still going up, we can probably exit the market, enter the market again here, and put chandelier stop loss and put 10 cents below the entry price and let the price go up. And anytime the price reverses, it will hit the 10 cents below and you will be out of the market and you collect your profit. I hope that you enjoy this video and wish you a best trade. To recap, first we have to find the direction of the trend. Second, always trade near the market structure. Third, use price rejection to better time your entry. Fourth, use proper stop loss. And finally, use proper target. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.